This is Dan Max at eXp Realty, aka the Trading Agent. And this is your live market recap for Thursday, November 17th, 2022. Good to see you guys. Let's get a mic check, and also too, if you're watching after the fact and you want to skip to the official start of what I start digging in deep, go ahead. I'm gonna hit the timer now, probably about the 6:30 mark. And yeah, let's talk about it. I think a lot of people, as normal, confused. They don't study the past. They don't understand OPEX. They just have this deep underlining fear, thought, beliefs. I mean, I don't know what the best way to describe it is, that the market is somehow easy during CHOPEX. And I've warned people, the goal is to kill the VIX, but at a price, right? You got to knock the market both ways. Remember, volatility comes in when the size and the amplitude of the moves are smaller. Really that simple. Near term, it's always difficult to know. It's absolutely always difficult. Usually you get tops, bottoms during OPEX, so that's always on the radar. But at this point, I don't know. Just figured it'd be worth coming in here talking, because it's just amazing to me how, we post in the Discord room. I think a lot of people understand what's going on. It's not easy. No one's saying it is. Twitter, kind of a joke. Just the people speaking on here, I'm amazed that people have tens of thousands, 100,000 followers, and the people that follow them probably don't make any freaking money off of their words. It's like the never-ending economist, right? Like, just economists speak. You can't make money off of their crap. It's just a bunch of noise. It is what it is, I guess. But a lot of people on social media, I really don't think they trade. Part of me is starting to think that it's just a game of buffoons, just leading the blind. And I've always known that somewhat, but it's just gotten bad. Got an echo. Okay, let me thank you for that. This is a good time to figure it out. Mic is on. What else is on? There shouldn't be any other input displays. Let me see if did this change it? Is there an echo now? Bonus. Echo. Does it come down a little bit? No echo. Okay. Just curious. Turn down the input capture volume slightly. I don't know if that y'all could tell. These are the kind of things we do in the first couple minutes. If not, I'll just turn it right back. Either way, let me refresh. All right, sound is fine. Okay, good. I kind of talk about this, and as somebody who's been doing this a long time, it's still almost amazing to me that the pull of the masses really gets people to think particular ways. It's really hard to be an independent thinker, and that's where I honestly, like, some of these people on Twitter, the ones that had the humility to actually be wrong, if they are, because again, it's a probability game, no one wins all the time, but to go against the grain, like, it just seems logical. That's where the biggest money is. It's not doing what everybody's doing. And I'm just always mind boggled that the supposedly the best and most sound advice is the advice that everyone agrees on. And when I say agree on, like the masses, like, oh, at the highs it's going higher, at lows it's going lower, like this never ending mess of mind games that just, it's like people are scared to think. It's really hard to go, all right, I think oil is capitulating today. Well, let's look at the evidence. Let's look at the past. It's like, I'm reading all the Twitter, and it's like, oh, but all this stuff, all these seasons, everything that's going on. It's like, all right, well, you don't know for sure. I mean, nobody knows, but based on repeating tendencies, I don't know why you wouldn't give it a good old college try here. Either way, we'll talk about that here shortly. I still think the market, it's hard to find a top when everybody thinks it's a top. And, I've written in my notes a million times from previous tops, like, everybody agrees. The high is in, it's probably not in. At the lows, everybody thinks the market's going lower. It's probably the bottom, not the top. And so you could probably, and if everybody thinks it's not the bottom, it probably goes lower. I mean, sorry for the confusion there with the words, but that's my point, is like, the masses are always fooled. The market makers get an A+ always for manipulation, right? They're manipulating emotions. They're manipulating the game. We talk about the 8 rules. BPA, Anna Coulling took it from, I can't remember who specifically, but it's really that simple. But is it? It's really hard. It's really hard to take what I would consider the evidence for what it is and realize if it's being parroted over and over and over and over and over again at extremes, or it's being it's priced in. You got to be on the lookout. Well, if everybody's screaming tops in the market, head and shoulders top. Remember, we've seen this before because I think we saw this. I want to talk about it. We saw head and shoulders tops, the previous top at the 200 day, and then it went higher. Remember, if you violate a head and shoulders pattern, it leads to a rocket ship. So if it's a head and shoulders top, it leads to a rocket ship higher if it invalidates. Same thing at the lows. If it's a head and shoulders bottom and it makes new lows, goodbye. So we'll talk about all that stuff. It's FOMO at its finest. That's where we're at in the markets. And not surprising. You're going into the holidays. Everybody wants to make a decision, go out of town, do what they got to do. Market's going to make people pay the price for being indecisive or just being scared, right? Like, now, we've talked about the VIX. We talked about what's going on here. I say this over and over and over and over and over again. Things are always evolving, so you have to be mentally ready to pivot. We expected a red wave. Didn't happen. All right, well, personally, I'm pretty sure things are now going to be a slightly different when it comes to oil and gas. I don't see them having any plan of getting supply up. People are like, oh, the supply will be up. I'm like, oh, maybe demand destruction near term, but do we think Russia's really done? I don't think so. We'll talk about it. All right. Let me end the alarm. Let me start the recording. This is Dan Max at eXp Realty, aka the Trading Agent. This is your daily market recap for Thursday, November 17th, 2022. Hopefully you're doing well. Want to get into the market pretty quickly here. There's a lot of stuff going on. I'm doing this live. If you are new to the channel, please subscribe, hit the like button, hit the notification bell. You'll get notifications of live chats, which we do all the time. And it's nice is that sometimes the best conversations are at the end. Stick around. You'll see we open up the mic for everybody. If you have questions relating to the stocks I'm going over, please interrupt me. If not, let's just keep it going. A lot of people, I know, are struggling with OPEX. We talk about this all the time. CHOPEX, it's OPEX, study the past, tops and bottoms, what's going on. We've got to dig into it deep because at this point, you're, to me, at some inflection points and material names, and then your tech areas look like they're in in-between zones, which to me means if there's going to be that rotation back and the market wants to continue higher, which I think it does, because again, we climbed the wall of worry. If everyone's bearish, I've noted this a million times in my tops and bottoms within my journal. If everybody's bullish at the lows, it's probably not the bottom. And if everybody's bearish at the highs, it's probably not the high. So on that note, let's get into it. If you want to be part of the Discord room, DM me on Twitter. And just like mortified by what I'm reading today on Twitter. It's like, man, could everybody be wrong? It's like, could everybody not be wrong? No, of course everybody could be wrong on there. Like, it's freaking social media. Bitcoin, we've said this for months. Leave it alone. If you owned it, you had to break out and hold out above the highs. Couldn't. Now you're back at the range lows. Playing a game between the highs and the lows. At this point, I would tell you, stay away. That's not what people want to hear. Maybe it's a capitulation, but if you're buying it, you got to have a stop. Please do not sit here and just go, well, I'm buying Bitcoin forever. I'm going to hold it. Don't know for sure. I don't trust that. Again, it's like if you've traded gold for any period of time, you know how hard it can be. Oil. All right, here we go. Breaking below support, retest the highs. Is it coming back down to new lows? Back in the 76s. Demand destruction? I don't know. When was the last time oil bottomed? During OPEX. Here it was. And then chop and then went higher. This action today, and we'll get into it, it feels, if you see the gaps in the action on the USO, it feels very capitulatory near term. Now, are the fundamentals, you want to argue it? I don't care. I really don't care. I've said ultimately you will get back probably into the 60s, but the market would probably implode first. Well, is the market imploding? No. Will oil catch a bid? Probably, if what? The money rotates. And this is where it's like, all right, take the chance. Seems logical to me. I mean, solar stuff is not getting smashed. Oil service names are holding up really well. This seems like a very coordinated effort to get oil down, but let's think about, again, because I usually don't talk about the economics, but here are a few things that just lay in the back of my mind. The party that just won the Senate has no plan for oil and gas. We need to refill the SPR. We're still in issues with potentially overseas, globally. Oil producers are at a point where there's no incentive for them because they get attacked religiously if for making money and pumping oil. So supply demand game, we'll see. I mean, it could be just a big choppy zone. That's always got to be on the back of your mind. Could you go back to the range lows? Maybe. That's why I want to watch the close on this stuff. We'll see what happens. Options expiration, always a game. You never know. This action, though, currently, I mean, you got to look at it. It's bearish. But let's talk about some of the things going on in the market with the dollar. You'll see as we paint the picture, it's like, is it? Is it or is it a trap? And we'll talk about why I think it's a trap. All right, nat gas needs to get over this like 640 area, building up. I like it. Remember, this futures contract is always going to be front month heavy at the moment, or maybe not. I can't remember. Again, I hate trading view. If they're listening, I'm sorry. It's just y'all's charts. I find so many issues with your charts at times, not being just having issues. I have this way like consistency. We'll see. The volume here, it looks interesting. But again, I don't even trust the volume. I've told people this. I don't trust the volume metrics on TradingView at all. So I would just say watch the swing zone, 640. Keep it simple, stupid, right? Like, let's see what's up. So here's where it gets interesting with the dollar. And we'll get here. Let me pull it up. Put out an alert this morning. Said, watch the 28 upper 80s. It's been resistance. Is this a professional gap? Is this a head and shoulders bottom? I don't know. But the volume on the up move doesn't really give me much confirmation that it's a professional gap. Now, you can get gap ups on professional gaps on light volume, but even down here, there wasn't much like power to stop. To me, it looks just more like an oversold bounce. Because this was the power of the move, and then it chopped around and had a gap up. Again, here's how you take the thinking out of it. Well, just watch the range highs. Yeah, tons of gaps, which is natural, right? But just watch this area. 28.90, 28.88. If it's the Dixie, I can't remember what the Dixie's at right now. But keep an eye on it. TLT, we said the Feds are in the sweet spot, right? Watch for the 100, 101 area, 50-day old channel. Look, you hit it yesterday. Decent volume up here. Is this distribution near term? I don't know. I've told people that very clearly at some point there would be a monster rip in the TLT if the market's about to implode. But is the market about to implode? Or are we just in a sweet spot? It's really hard to know. I mean, I personally struggle with buying bonds here because I don't think the inflation stuff is over yet. But near term, the market's excited about it, right? Could it hold up into the next Fed meeting? Absolutely. So, I mean, what you want to do based on the bond market at this point, it's not moving. We talk about velocity of speed. It's not that fast. Like, that's pretty damn steep. Now, I know people say, oh, that's a pretty good rise. Agreed. But now you're coming into resistance. We'll see what happens. It's really hard to know for sure. But we've talked about this on the monthly, if you remember correctly. Let me show you. In 2008, before the big markets drop, the TLT spiked. Well, you're back at the zones that matter, so naturally it bounces. It's really tough to know. Remember, bonds in the market have done what? They've literally moved together with each other. So if the bond market's popping up, is the stock market going to hold up? Things you have to ask yourself, because think about it, the 60-40 portfolio this year has been absolutely decimated. All right, well, is it maybe time for them to both rise slightly? God forbid, maybe. We'll see. The VIX, what did we say? He said that action on Tuesday was not what the bulls wanted to see. You don't want to see this big spike up and then come right back down. You had the VIX roll over, it's just tight action. I've said nobody but me. No, probably not. I'll give credit. There's probably some people out there who are like, oh, if the VIX can't break out, then it probably means what? The market's going to come back higher and the VIX will come down. Well, we talked about the gap. Could it get filled? This area matters. 23, that t-shirt, that area matters. I don't know why that's not stretched over. This area matters. That area, whatever you want to call it. It's been resistance, been support. We'll see what happens. We're in it. We're in the middle of it. So at this junction, do you want to get extremely bearish or bullish? I would just assume the trend is your friend here. That's where I'm thinking. SPY. Are we surprised it pulled back during ChopX. Are we surprised it's chopping? No. Talked about the 100-day being in play this morning. Think. I know some folks in the Discord room talk about, apologize if I didn't post a chart. I thought it was. But it looks very similar to this pattern here. And we talked about, the repeating pattern setups. Now, I know this is a little steeper, but the 20-day holding, the first major moving average pullback. Well, here you go, right? 100-day. Now, bears are saying professional gap game over. I mean, I could see that, but this is what the problem with OPEX and the volume. You really don't have a confirmation signal. You really need to break it out, break below at 390 and go. If it doesn't, then I'm telling you, I think the commodity game is about to pick up. Doesn't mean that tech can't hold up. Doesn't mean that the market overall won't hold up, but maybe this is where we get the IWM lag and the SPY picks up near term. Because again, think about it, the IWM, it probably wouldn't like if oil and gas go nuts. Also, too, what we've talked about, what was I thinking? This action right here. I still remember very clearly, we thought this was the high, right? It got choppy. It was the first of the month. And then it ended up running into OPEX. Is the opposite about to happen here, where you get the choppy action during OPEX and you run into the first of the month, or whatever you want to call it, the holidays, season, Thanksgiving. Just keep that in mind, because we thought this was the top. Remember, we got stopped out, and then it was one more gap and last go. What could be the catalyst for the gap? I mean, in my mind, there's 1,000 of them, which is interesting. People are not seeing it that way, but I think there's a lot of things, because the market, there's a lot of bad news out there, right? Like, the market is constantly digesting bad news, right? The market climbs the wall of worry. Well, what could be good? I mean, I saw this today in my, usually I tell folks, like, 1% of the news actually matters. And so once you get good at, like, trading and understand it, like, it'll kind of ring in your bell. It'll be like the diamond in the rough, right? You'll just be looking around, and all of a sudden something will just, like, fixate. And one of the things was China was, importing more vaccines. Well, does it really make sense for them to do more restrictive China stuff after the elections? I'm assuming they did it because they were trying to affect the elections. Would we not agree? Like, this is a point nobody's talking about. And this is just my brain catching up to, like, news and thinking about, like, all right, if they're importing more vaccines and the election is done, like, is there really anything for them to, like, for reason for them to continue to be restrictive? I mean, here in the United States and most of the rest of the world, like, COVID is what it is. Not to talk about it in a sense of, like, it's real or not. No, it's real, but we all know, like, what happens. Like, viruses adapt so that they don't kill their host. We know that. It's like the flu. It's literally the same, I think, same Spanish flu from 1930s. The flu adapts. So at this point, is it deadly? Obviously to people who are at risk, naturally, who are obese, older folks. But the general population, it's just another version of the flu, cold, whatever, combination. That rang in my ear, and nobody talked about that today, but I'm thinking post-election. What is what purpose right now at this point does it have to be more restrictive in China? We'll see. That's my thinking here. That to me could be the potential run up. That could be potential run up. Just saying. QQQ, Nvidia earnings drops, SMH we talked about. Watch what happens to SMH. Gaps down and popping back. Doesn't look that bad, y'all. It doesn't look that bad. Now you're just in the zone. It's the top of the VAP zone, and it seems to be holding. A lot of people just screaming bearishness, and this is the thing. When everybody's screaming bearishness, it's usually not right. When everybody's like, what is going on, and it's dropping, that's when I'm like, market makers got them. Does this make sense? Can I get, like, at least one yes? Like, when the market makers got everybody out of position and everybody's not expecting something, then you got to be worried. Go check out the Twitter feeds. Go check out StockTwits. Like, everybody and their mom is like, game over. Finish him. And they're like, oh, the Fed said this and the Fed said that. Look what's happening. The market seems to be just chopping as the Feds talk. And it's like, all right, well, we know what they're going to do in December. But we can't trade the future. You don't want to be early shorting. Right? You don't want to be way ahead of it. Because if you have options, you're going to be wrong. You're playing these leverage ETFs, you're going to be dead wrong. So we'll see what happens here. This doesn't look that bearish to me. We'll see what happens, as we said, on the SPY. Now here is the canary in the coal mine, right? It's always the IWM. Well, for the IWM to make new highs, that's going to probably be more difficult than, say, the SPY. And then what comes in? 200-day. That's where, I mean, I should probably like watch for lag. Let me see if I can just pull it right to the 200-day. Like, that's what I'd be watching. Watch for that pop and that lower high. Because we've said, remember the IWM peaked in November? I've said this 1,000 times. The market peaked in December. Could this be the peak for the IWM? The first sign you need to see to be actually shorting in time, just not early. I still think commodities are going to do what? They're going to continue to rise at some point, and they're putting, go AA, high of the day. They're going to put the Feds in a pickle. That's what you want to see. You want to see the Feds have to waver. Well, what's going to do that? Higher oil prices, higher commodity prices, right? That's the goal here, I think. Because if not, they're in a sweet spot. And I'm not saying I know for sure, but this could get choppy for months if the Feds are in a sweet spot. What does that mean? The markets could just go sideways. Most people don't understand sideways action, but have you not seen the monthly before on the IWM? Have you not seen how you can just go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 a year sideways? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 a year sideways? You don't want to see that. You and I don't want to see that. Maybe it's our bias and we hope we're wrong, but damn, I don't want to see a chop. I don't want to see a choppy, boring market. Sorry, that's just scary. I hate those markets. Gold. Talked about getting up to 165, 166 level, maybe the 200-day. Pulling back today. This candle action, I mean, a little suspect, little sus. But here again, if the Feds are in the sweet spot, and this is the range lows, I mean, is this the range highs? I don't know. Because once it got over this and gapped over it, you 1,000% knew that 161s were not the range highs. Like, right? That's just a big gap. It's probably going to continue on. Here's the first pullback. Is this like a multi-day chop and then go to hit the upside target? Or is this the high? Again, that all depends on the market. If you're listening and you have traded gold, be aware the 0.786 is the most sneaky and most important fib out there in gold. I repeat, the 0.786. Most people do not know this about gold. Again, I've traded gold for 20 years and it has kicked my ass. But you know what? I learned a lot of lessons. The 0.786 is the sneaky mother beep of gold. The 0.786 is, I don't know why. I don't know why that is the case, but the 0.786, because maybe it's a confusion move where what? The market thinks that something is going to happen, like, you gets excited about getting over the 0.618. Maybe. Just keep that in mind. We're at this now again, like this fib is sneaky because it's older. Where's the bottom of this thing? Where's the one? I mean, it's so far back out. I don't want to mess with it. Well, point being, if you're shorting gold, long gold, the upside probably not really worth getting more long. Again, I still have a little bit left, but I'm ready to like puke it up if I ever feel like it. But I'm holding out for the little bit of the range highs. Silver, naturally lagging. Gaps down, back into this range. There it is. Sometimes I move the boxes by accident when I'm surfing around. See what happens when it gets to 19. Got over the 200-day. Nice little trap. Oh, look at that. Oil building as the day goes on. Not the end. We'll see. Hey, Dan, question. How can the Fed bring markets down? Man, if they go to 50 basis points in December, that is bullish for the stocks. If they pause next year, that is bullish for stocks. I don't see any scenario that's not bullish for stocks. The only way for stocks to go down is something breaks. Thoughts? Ken, I completely agree with you. I've said this many times. The worst news is baked in. Something has to happen to help trigger the next capitulation or move down. If this Bitcoin crap is not creating an absolute market liquidation, then I don't know what is. And I agree with you. Remember, there's a ton of money on the sidelines. Could it be some sort of conflict with China, Taiwan? Agree. Maybe. Could it be Russia heating it up again? Potentially. Could it be a host of things that we don't know? I don't know. I really don't know. But here becomes the thing is that we try to trade evidence, because sometimes we talk about this all the time. The news doesn't present itself till after the fact. A lot of people don't remember that we shorted before COVID. And they're like, how did you know? Well, the chart action, and then we were also looking at it's kind of funny. We're looking at the meteorological weather forecast over China. All of a sudden, like their smoke stopped. So at this point, here's the thing. If you're lost, I told people, like, I am still not in my IRA stuff. Like not 401k stuff. All old 401ks, all the recommendations, still cash. We have not seen the capitulation moment, but that doesn't mean you can't chop for a while. That is the hardest part. And that's what the market wants to do. It wants people to give up. And when I say give up trying to figure out what's going to happen. And then at the highs, everyone will be like, well, I guess it's just going higher. That's what they're really good at doing. So at this point, I'm glad you brought that up because it is confusing. I've tried to tell them, like, you can't be bearish at this point if everybody's bearish at the highs. That's not how a market tops. It doesn't top with everybody bearish. It's usually like some news signal, like the new bull market's on. Think about oil, like the Time magazine. Oil is dead in whatever April or May of whatever 2020 was. Like, that's the kind of crap you need to see. I'm just not seeing that right now. I could be wrong here, but this is the probability-based mindset of mine. This is what I'm thinking. I don't know for sure, but those are the signs and the things I look for. Good point. Good question here. We could be in the chop zone, my friend. We could absolutely be in the chop zone until the Feds do something. But I see commodities down. Okay, this is where I was saying. This is where I think the difference in what we expect potentially happening to put the Feds in a pickle to have to raise more is commodity prices have to rise. Because again, we talk about demand destruction, yes, ultimately. But what? Ultimately? The Feds can't control supply. Fed can't control supply. They can't bring more oil on whatever commodity. Good conversation. I'm glad you interrupted because that's a good point. A lot of people just like, I read the news, everything's crap. And it's like, yeah, everything is crap, but is it priced in? Market climbs that wall of worry. Been there, done that. Yeah, no problem, Ken. GDX talked about getting up into this 28, 29 range. Is the 200-day in play? Why is sometimes the 200-day not playing? It's short-armed it before. I don't. Here's a 0.786 for a gold name. I don't really know. They were like, that's not a good answer. Well, guess what? The more you're up, less you own. This gap here, is it the start of the move? Like a continuation of the goof? Well, is it 3-gap trap? Maybe you got one more. That's what I'm talking about. Like, I just don't really have a feel on gold, GDX, all that stuff. I'm not shorting it. Some people are. Hey, there's probably points to be made. And again, if you did short the highs, absolutely, that's a win. It's just I don't know how much downside there is. I could be completely wrong, and this thing opens up the door. Great. Congratulations to them. Again, I'm not really long or short. The only thing I got long is gold. Miners are always tough. Yeah, I mean, that's typically the first drop does get bought. Right? Something, a little bit. I don't know. Even a little bit. Yeah, I mean, the problem with this action for, say, like the GDXJ that I have is you're into this, like, VAP zone, and then you got tired here. Is it just like this? I don't know. I like GDXJ way better. We showed on the monthly why. Like long term, this 25, 26 area or some sort of wipeout down into the teens would be excellent. I just personally, again, you got to pick and choose what you're going to trade. AG, here you go, holding the 20-day. Doesn't look that bad. Things that don't look bearish if you like the miners. Like it, and again, but think about it too. Why would it bounce on the 20-day? Well, it just went from 980 down to 880 or whatever. First, as you said, the first dip gets bought. Probably buying. Yeah, I just don't see a ton of upside in the miners. We'll see, though. I could be wrong. That's why I still own a little bit, because what if the Feds lose it and the dollar starts mashing more? AEM, we talked about maybe getting up the 200-day. I don't like that it couldn't get up there. Why is this drawn like that? It should be like this. Something of that nature. Hold on. There you go. I don't like the deal they're doing with Imana, especially at this point, because I don't think gold's breaking out. But if the gold does break out, maybe it does. It's just hard to see that at this point. Bitcoin's lost its luster. I mean, everything is really dependent upon, like, demand, supply. Like gold, I don't know how big of a demand it is. Oh, there you go. XOP, high of the day. Interesting. Newmont, we'll just run through these real quick. I hate these names. Newmont hit the 100-day backing off. I mean, this is your best bet for shorting miners. It's just these monster miners. They're crap. PAAS, I like this company, but I hate their Yamana gold deal. But here, this is the thing. Could it get in the chop zone? That would be ideal for the next move. AMD, let's get into techers. Man, going slow, but whatever. Talked about the 100-day being a little island floating reversal. Here you go. First dip being bought at the 8-day. We'll see what happens. NVIDIA, up, down, left, right, A, B, select, start. Hammer, indecision at the 8-day. Good question. Don't know. SMH, talked about holding some calls. It popped up to whatever. It was like 220. I got close enough and I was like, I'm trying to get back to even on my calls. I think I lost 50 cents. I bought 2 of them. Lost $100. Yee! End of the move. Oh, so painful. No. Here you go. 8-day drops down, rallying right back. If this was more bearish, don't you think it'd collapse? I've said this multiple times. I think you get a choppy top. It's been known to chop top. If you get a slightly higher high on the SMH, I would short the crap out of it with confidence with a stop. We'll see. I mean, keep in mind, I show this all the time. Like, the SMH has gotten pretty slammed. 320 approximately down to 167. I mean, in a bear market, you get these big rally. The more something's down, the more it can rally sometimes because it's just been absolutely liquidated, right? And the market makers know that. Well, now you have the tax loss selling. Are people like chasing it back up? To put them back in a position like they're wash sales? I don't know. But the first dip is getting bought. More information. This is where I think at some point you're going to have to just trust that either you get the blowout and then chop and then it goes. But even then you had like another dip to buy. Well, could you get another pop to short? That becomes the biggest question. Do you want to be early? Because I'm with my friend here, Ken. Like, it's really hard to get bearish when the market is just, I don't think there's a lot of catalyst for, the next Hulk smash. Adobe pulling back to the range highs. Look at that, bouncing. Not surprised, right? Apple, can't be really bearish Apple unless what? It probably gets back to the range highs. And look, it gap down to the 20-day, closing back at the highs. I mean, it's probably going to test the 200-day at some point. This is just a big-ass chop zone. And I'm sorry to say that. I don't know. I mean, everyone wants to hey, time to short now. Clearly the time to short was up there. But even then, look what happens. It's bouncing back. It's holding the 20-day. It doesn't look that terrible. Remember, all that cash on the sidelines as well. It's tough. Tech is just, again, to me, it's a no touch. But if it's not melting down, I'm telling you, there's going to be rotation into the commodities and the leaders. It's been the case. As these names look upper left, lower right, what makes higher highs and higher lows or holding higher lows? Commodity stuff. Just keep that in mind. Keep that in the back of your mind. So at this point, Amazon, I mean, it could go in the chop zone. And then it could run up a little bit. I don't know. Your guess is good as mine. You want to trade this stuff? I mean, you can. Just have stops. That's all I'm saying. Just have stops. Well, look at them apples. What is going on? I'm just like, all right, UNG, got to get over that. PXD, looking good. Whoa, AA, high of the day. SMH, doing okay. USO, 70.20. Got to get over that 70.30 I was watching that. NTR up a buck. Nice. First solar, 160. Again, you can't short solar here, too. This is hard. This is really hard. And that's where I'm trying to tell people, lay off some of this stuff. CRM, software. I mean, this is hard. It's hard. This is a chop zone. I can't tell you. I can't give you any really good advice. Goog, holding the 100-day. It's been resistance. Man, if it compresses here high and tight, maybe you get back to the 105. Maybe you get back to the 100-day. Maybe you get a little over the 100-day. Maybe you get the channel. We've talked about this. Here you go. Here's maybe what it gets to. Let me change the color because it's kind of crap. Oh, gosh. There you go. Fill background. Let's just make it red. Maybe that's where it gets to. We'll see. I mean, this is all speculation, but in probability based, right? Meta gets back into the channel. We talked about, remember, market is a liquidity seeking mechanism. Well, all the headlines that they're laying people off and everybody's dumping and the market makers are covering. Well, now it bounces up to the channel and how it's holding the 20-day. 20-day was resistance. Will it be support now? This is, again, I don't like these stocks long term, but it doesn't mean they can't chop around. Hey, Microsoft. Dollar exposure. Hits the 50-day, bounces right back. Again, I don't like any of these names because they're upper left, lower right. They just look like crap, but doesn't mean they can't bounce. NDAQ, all the volume will be leaving the NASDAQ at some point, and they will be all trading commodities. Every Blumpkin in the world will be going commodities once the momentum really starts. Keep in mind, the momentum hasn't even started yet. This is still the birthing pains, as I call it. Okay, hits the upper zone, backs off. NDAQ, I've got March puts. This is the Coinbase for NASDAQ. I anticipate, like the last tech bubble, money will be leaving tech, and those names will lose all their volume too. Meaning not that their stock volume will change other than the amount traded, which that's going to hurt the NDAQ. NASDAQ. Bitcoin, I mean, here you go. MicroStrategy, is this a bottom? I mean, you know how this thing bounces, 50, 60 points, always possible. Netflix took most of the profits off in the last couple days. I honestly thought about adding the dip today, and I just didn't. I didn't also like unload the last little position. I'm just going to probably use the 20-day because that would be the best. Remember, the first dip gets bought, right? The first dip should get bought. We'll see. But that gap is a little ominous. But I still think you can get to filling the upper gap. I think it's possible. Right? Think about if this is the rubber band man theory. Let's start from the beginning. Big up move, a smaller up move, and then the last move will be the smallest with chop. That's what I would be focused on. Roblox. Glad we have USO at the end. Yes. Holding this weird old trend line. Not weird, but just choppy. I mean, I probably should get rid of this. I think they get bought out at some point because companies love to, create addictions for kids, and they love Roblox. We'll see. I mean, I don't have kids, so probably not the best one to ask. Tesla, leave it alone. If Elon's selling, he doesn't even want to be CEO anymore. And you want to still buy this? I mean, not you, but I mean, I get a lot of people, oh, Tesla long term. I'm like, no! That was the blow off top. After a blow off top, you go down. Are we done going down? I don't know. But this company, again, everybody and their mom's going to make an electric vehicle at some point. Their margins are not going to be increasing, expanding. Letter X. Let's get into materials like these names. We talked about hitting the 200-day backing off. I mean, today's candle you can't really say that's bearish, right? Gaps down, long wicks, closes at the highs. Watch the 200-day. Gets over it, it could fly. Nucor, wow, $5. Man, I was watching this thing down earlier. Look at that. Commodity rotation. Talking about it. Listen. Look at that. Opens, gaps down, long whip, closes back at the highs. Interessante. I don't know why I have Target in here, but I have it in my stock list. I'm like, this is not what things do when the market's about to collapse. You don't gap down on crappy earnings and then rally back. Sorry to interrupt. Back to commodities. VALE. Gaps down, rallies back. Now, that's pretty supportive near term, right? You're holding the old support and the 618. Doesn't look bearish. Arrow, someone was saying this looks bullish. I was like, you know what? That's interesting. It's holding the 200-day, 2-day, and is this considered an outside, like a trap? Like look below the 200-day and rally back, close at the highs? Doesn't look bearish. I mean, I see higher highs and higher lows. Notice the difference between tech and some of these names. Just throwing that out there. CCJ. What did CF close at? Nice, 102. Doji. Interesting. Now, again, we've talked about this with uranium, this name particularly. Like, they've got a Westinghouse deal. Liquidity, the stock is going to be probably hard to trade. Meaning what? Well, if they're going to use shares and debt and all this stuff, like, I always tell people, like, people don't realize, like, if you are selling debt to a company, you know what the best way to hedge your debt is? To short the stock. Now, they don't necessarily have to do it all the time, but if they're unsure, absolutely, I'd be shorting the crap out of the stock if I was selling them a ton of debt to buy Westinghouse. What if the aliens come up with a better source of power than uranium? Just kidding. I don't know. CF, All right, finally, it's official. The deal's going through. It looks like Russia is going to still provide grain, whatever, or let Ukraine provide grain. I don't even follow the story that much. Stopped out yesterday because I didn't like the action. Gap down. People were like, oh, congratulations, you stopped out. I'm like, it wasn't like rocket science, but look what it did today. Here came the news. Here comes the news. Well, it didn't close bearish. I don't know. Say indecision. You get back over the 50-day and you want to buy it? Because look at what it was today. It was the resistance. It was the high. You get back over it, maybe it starts the process over. Remember we talked about strong stocks, chop zones? Lower left, upper right. This is just could be a big consolidation pattern to get back up to the range highs. You bet your weenies. What did I say there? Weenies or Wheaties? I don't know. If possible. Mosaic back down to 50. This seems to be like a trajectory. Like this 50 area seems to always like kind of bounce around it. And then you get back to the channel lows and it bounces. Man, that volume. Again, I mean, it's not like, you know how you had like the reoccurring news of just like beating people over the head. This, and eventually the market prices it in. You have to remember, the market is very good at pricing in what it knows. I always tell people that, like, buy the rumor, sell the news. Well, once the news comes out and they price it in, now it can drop, or the opposite version, sell the news, buy the rumor. Or sorry, sell the rumor, buy the news. Once it's priced in, the market's priced in. Now, how many times can we talk about this grain deal in Ukraine with Russia, right, for Europe? I mean, it's been going on for months. We not agree? Can I get like 7 yeses? Yeah, it's like beating you over the head. Like, boring. But you had to trade it. That was the hardest thing, right? NTR. Look at this action today. It gaps down. I mean, it zipped right back. That doesn't look bearish to me. I don't know. AA. Hell yeah, I love this close. I was watching it in the background trying to talk to you. I was getting like slightly excited. Here you go. Back tests. What? The 45 area. We talked about 45s. What was the exact low today? 45.55. All right. We talked about this is a strong stock, y'all. This is somebody, big boy, is supporting this mother. Somebody's supporting this mother. And it's coming off a, this doesn't look like, I mean, I guess you could argue it's tech, but think about where tech is in relation to 2022, right? Like tech is like, commodities are just back at their levels of 2021. All right, let's see what happens here. I mean, Boeing's been on fire. So, like, if Boeing has been doing well, aluminum has got demand, y'all. Nice candle today. I mean, ChopX, OpEx. There you go. ChopX, OpEx. We'll see what happens. Let's end it. No, sorry. Let's not end it. XBI. My bad. I'm like trying to get the oil as fast as I can. Here you go. Gaps down. Try. Technically close enough for government work. Filled the gap. I mean, maybe you get there tomorrow. Watch what happens at the 79.50 range. Either way. Things that don't look insanely bearish. But this is here the point. Like, you got to pick what? You got to try to find the best winners. I personally think commodities have more upside than tech because there's going to be people who are stuck. Here we go. Financials. Is the market rolling over? Well, we hit the upside target zone. Just as this, we had a broadening pattern down. Do we have a broadening pattern upside? Yeah, it hits the 0.618. If you shorted financials at this point, looking good. But here's the problem now. The 200-day is support. Got an old fib there. I don't know. I would love to see the 36s and then fail. I don't want to short financials early. I've said that over and over. Morgan Stanley chopping around 90, 88, 89. Nice little gap down, hammer back. We'll see. Need more information. JP Morgan's been absolutely killing it in this market. Just lying to everyone, just telling them to give up their shares and then telling everybody to buy puts. I mean, these guys are working hard, or hardly working because the media is just running with their narratives. I don't know why you wouldn't get up into this range. I mean, their quarter's been made. I mean, they could literally stop trading today. They probably made a couple, I don't know, I would say 20, 30, 40 billion trading prop desks. They could be murdering it. We'll see. Don't know. Solar. I've tried to be warned people. I'm like, I don't think these things are going to fail if the commodities rotation comes in. And this got even worse recently. As much as I hate to say it, the Dems winning the Senate doesn't hurt solar. Do we not agree? That doesn't hurt solar. Near term, I maybe I've said this. I got my alarm. 88. We watched the zone. Today's action, you gap down and you rally back to the close high, near the high of the range. It doesn't look bearish. It just doesn't look bearish to me. It looks like a support zone, right? You're making higher highs. I mean, you could argue here. There's like a big freaking stupid channel. I don't know why I didn't draw this earlier, but you can see it. Maybe there's just a big channel. I mean, how you widen it out, whatever. Some people might argue that's, again, think about it. Like, since December, building a base. The blue party winning the Senate does not hurt solar, in my opinion. Sedge, again, all these names just say, like, I don't know. I mean, holding up here, said watch maybe even the monthly channel high. I'm not touching it. Sedge, did I say ENPH? I meant it. Sedge, you can't be bearish, solar. Look at this crap. Held the 200-day and rallied back. Man, wow. 20-point range. 25-point range. Not bearish. Again, I struggle with, again, I aggressively want to short solar. Aggressively, but I can't do it. I just can't do it. I've been there early and seen what happens. Here, First Solar hits our freaking target. Hits our target. Oh, crap. Is it going to break out of the channel? I don't know. It's really good at playing games. Show you the monthly. Talked about this fib. You're welcome if you didn't short it. Maybe it needs to do this like blow off, like long wicket. Long wicket. You've got a long wicket, sir. Now, this isn't sustainable, right? We talk about like 6 months of this, but ooh, look at that. I hope it's not that. And here you go. 1, 2, 3, 4, 5. Be careful. I trust me, I am itching. And I don't know if it's athlete's foot, jock itch, to short solar. No, I'm just kidding. But you know what I mean? Like, it's just like, oh, it feels right. Anyway, oil. Let's get into it. USO. Talked about the low end of the range here. This is the last OPEX. I was like noticing today. I'm like, oh, interesting. Okay. You had like a previous support zone. Well, here's your other support zone. Oh, sorry. And again, I don't really like to chart the USO a ton, but we talked about oil. Okay. Interesting. Interesting. We'll see what happens. I mean, I like this close. Let's pull up the 10-minute because you know I want to see the 10-minute close. Oh, you know I do. Last candle, decent volume, indecision. Okay. Okay. Well, I told people I thought we were probably bottoming somewhere. Look at that. Zzz, chop X, light volume. Went a little lower, went a little higher. Closed 7. I mean, it's at 70.20. I don't know why it's saying 70.14 on the daily. If it's a bottom, because of OPEX, again, chopping out. Fly, eagle, fly to victory. This could be a solid buy point. It's easy. Stop is today's low. All right, well, oil is down. Nat gas should have been smoked, right? No. Oh, my God. It building a high. Is it making another little higher high here? Equivalent high. Oh, slightly higher high off the OMG. Slightly higher high off the lows. Now, who loves doji sandwiches? Drew, are you listening? Doji sandwich. If you know what a doji sandwich is. I would be careful if I was shorting nat gas. That looks interesting. Now, again, I talked about the last couple days, and now the volume wasn't huge, but it's like long wick, long wick, long wick. Next 2 days. Gap down, rallies. Gap down, rallies. Gap up, and it actually freaking stuck. It actually stuck. Didn't close at the oh man, who knows, right? No, that's interesting. XOP talked about the 20-day. Congratulations, range lows. Posted that earlier. Why is oil service rallying if oil's about to tank? Something's not right here. Here was the blow off. Even in August, remember July, August, zing. Here you go in May. I mean, these names are still, again, I hate to talk fundamentals, but idiots out there will be like, they're still cheap. Yeah, they're the cheapest sector in the S&P 500. Hey, this chop action, could it lead? I mean, do y'all remember what happened during ChopX? Last one. We'll see. ExxonMobil. Look at that. Gaps down. Close at the high of the day. It said the monthly is probably coming into play. 117. You might get more of a markup. PXD. Oh, look at that close again. You son of a biscuit. I didn't see that. I talked about buying some around 248, 249 this morning. It was like, watch for a bear trap. I like that. Let me see the 10-minute. Oh, man. I just, again, I don't watch my account balance. I always tell people, don't watch your account balance because it makes you trade and do things based on whether you're up or down. Oops. Like, are you trading well? Does it look right? That's kind of stuff I'm looking for. Here you go. That is bananas. That's an awesome close. Yes. Because we had it here a couple days ago, which was interesting. You had that rally and then you flopped. And then you had this like big after hours candle like of dark pool going through. Somebody is playing games here with my heart. No, with PXD. Check the monthly out real quick too. I mean, I'm not trying to say this is going to new highs like right away, but it doesn't look bearish. Holding high and tight on the monthly, right? Keep that in mind. That's all I'm going to say. All right, I'm going to stop the recording. I'm going to read through the questions, and we'll do some free chat and talking. I appreciate everybody. If you have any questions, concerns, thoughts, stop by Discord room. Hit me up on Twitter if you want to jump in. I appreciate all the love, support, and the donations. You know how it is. Your tuition bill hopefully is much cheaper than mine because in trading, you either pay to learn or you lose and learn. Talk to you later. All right. Ken's got some thoughts here. For recession, dollar has to strengthen, so gold down due to correlation. Don't know. Stop, Ken. The dollar-gold correlation is not always perfect. I hate that correlation. It's not always perfect. No. That dollar, no, it's not always. Because at some point, gold doesn't trade only in dollars. You got to, like, that correlation is usually screamed the loudest at inflection points, and I've seen it be wrong. So dollar gold, no, not necessarily. I've seen gold get bought when the dollar rises. I've seen gold get bought when the dollar's down. It's a supply-demand game, or it's based on something technical. Down due to correlation list, but if the rates keep falling, then stocks no. But if dollar goes up, I think, Ken, you're trying to like play the economist. You need to stop playing the economist and be like evidence-based. Because again, we could sit here and argue for, not even argue, just have this nice chat for hours. What's the next move? Well, let's be evidence-based. We've talked about it. It doesn't look bearish. We got to watch the IWM retest. We got to watch how the market plays out. If commodities are bottoming and tech kind of gets, I would treat it like trash again, maybe, or just chops around. At this point, it's really hard to say for sure if the market's going to tank or go higher. The only energy I believe in is natural gas. Okay, well, again, energy is part of, natural gas is part of what I think should rise going forward. I mean, we have issues abroad. So U.S. dollar, gold stocks, yeah, I mean, I just like commodities. I think there's little downside because when in doubt, people need this stuff. And meaning need this stuff is in the sense of like we've had bottlenecks and shortages everywhere. This stuff going on in Europe's not going away. The powers that be don't have a plan. It just seems very logical. And again, when you hit commodity super cycles, I don't have the chart on me, but damn, I don't want to spend like 5 minutes finding the picture, but damn, if you've never seen this chart before about commodity super cycles, oh, can I find it? Can I find it? I mean, once they start, I mean, they're not short. It's not like a 1 year thing, right? It's not a 1 year thing. Ah, here you go. Oh, that's not a chart. I tried to place that down. Give me 2 seconds. Here you go. It's the original. Do you see how once commodity super cycles start? Man, this thing is so small. I apologize. You broke out. Now, can you back test and chop at the breakout? Yeah, absolutely. But the commodity super cycle has started. It has absolutely started. It's just how it plays out. And again, can the dollar go higher and the commodity super cycle go? Yeah, F yeah. Absolutely. Don't think for a minute that it can't. Exxon closed green today with a barrel. Redway was, yeah, who is lying? I think who's lying is oil getting manipulated down. Doesn't oil usually go down after Thanksgiving? I mean, again, seasonally, typically yes, but everything that's seasonal and normal has to be like thought of with a grain of questioning. Like, okay, if this is what always happens, is this what's going to happen? We've seen a lot of it not happen, right? Oil rallies in Thanksgiving, then down. Again, Ken, you're trying to like predict the market. Why don't we let it play out? And when I say predict the market, this is what's so hard, is that you are doing what 99% of traders do that causes them to fail. They start marrying theses and beliefs versus being evidence-based. And every trader who marries beliefs will blow up versus marrying the evidence, because the evidence will point them to pivot. It will point them to change positions. It'll tell them, hey, something is not right. The person that marries theses, like myself in the past, find yourself buried, burned, destroyed. Because the market is doing what? It's always trying to play games with what's going on. What seems obvious doesn't always work. And then what works doesn't always seem obvious. People have this belief in their mind that, oh, I have to see this. And this is why I have to see this. No, I'm telling you, let the evidence play out. Like, this is why I'm like, please don't short solar. Nothing's showing me that it's like about to bend over backwards and get throttled. It didn't. And it hasn't. You know, like, I want to believe the market's about to blow up, but man, everybody believes it. But what are we seeing? Support hold. The VIX isn't exploding. The dollar's been pulling back. The bond market has been stable. Like, all these things that say, well, you better start questioning your beliefs. You better not believe in the short God or the long God. Like, no, we believe in the evidence. And the evidence right now is not telling me that it's overwhelmingly time to short. And a lot of the topping mechanisms I look for is usually sentiment-based. A lot of it is sentiment-based because the market can do what? Like, the best advertisement for higher prices, higher prices. The market makers are playing a game. Like, they don't want to unload until they get everybody in. Remember, they're trying to get everyone out of position. Not, hey, let's let everybody in to short at the highs. No, hell no. Hell no. Doesn't work like that. Good conversation, though, because I think a lot of people do this, and this is why most traders blow out. Most traders will blow out because they marry a thesis versus trade the evidence. I married my first thesis was thinking that Sirius and XM were going to be in everywhere that terrestrial radio was, and that they were going to somehow like take over terrestrial radio, and they were going to become this massive cash cow. And I held the stock, and I watched myself lose like 80%. Happens. What do you expect tomorrow? Stock Traders Almanac says expiration day up 14 the last 19 days. Dow surge in 2008 up 6.5%. What do we talk about with OPEX? You know, it typically goes up one part of the week, down one part of the week. Well, looking at the SPY, here's Monday, Tuesday, Wednesday, Thursday. I would guess we probably rally back. If I had to guess the close, probably somewhere near where we're at now, 395 or 400. Oh, but what about the pin action on the options? Like, Jesus Christ. Like, it never ends. How many times do you have to see that stuff just not be right to believe that, all right, maybe the information you're getting about the options market is incorrect? I say that all the time. I don't trust the option market. I started trading options when I literally would have $5,000 to $10,000 options trading bills a month. That's how expensive it was. Now it's free flowing, but the information I don't trust for a freaking minute. People say, oh, you're paranoid. It's like, no, I just tried to use this stuff like I used it when I started trading, and it just doesn't line up. I've become, again, once you start, make mistake, shame on me, right? Like, if I don't pivot and change, right? But I see a multitude of traders who are just like, oh, options. I gotta follow what's going on in the options market, telling me everything I need. And you're like, no, you don't know who's buying and selling all the time. You don't know what the open interest necessarily means. I've seen the open interest flip in the sense of that you think it was all bulls and it's about to dump, and it's actually the market makers collecting all of the calls to go higher, and they manipulate the higher later. Yeah, I mean, I think they're going to take out. I mean, the put call ratio right now I'm seeing on the SPY is 1.28. Still, above 1 is pretty bearish, or bearish. Mid upper ones is really bearish. Good chat here. Any more thoughts, questions, ideas, beliefs? You want to talk? You got my brain. Squeeze starts tomorrow? I'm pretty sure the squeeze started today, Ken. Look at the SPY. Held the 100-day. Held the 100-day. Old support zone. So I don't know. I mean, that's what we're talking about, buying dips today. If you bought dips today, or if you got stopped out and then said, all right, I'm going to watch, you did okay. But I'm not surprised that we gapped down and rallied back. Remember we talked about everyone's like, the market's going to die? Well, this to me isn't really, it's not bearish, man. The MM collecting on long options, aren't the MMs the ones yeah, they sell options too, but remember, they have to take the other side of the trade, Herman. There are times near OPEX where people who bought tons of puts, right, have to sell them back at a certain point, right? Or they sell a bunch of calls and they have to buy them back. Because remember, people do not hold their calls into expiration. That's why you get ChopX. It's literally probably the biggest single reason why you get more volatility. Is the market makers do not want to hold your calls and puts either, but they have to take the other side of it. So at some point, they would rather them just go to zero if they can get both sides. If you didn't know that, there you go. Any other thoughts, questions, concerns? Always like the open chat better. Reviewing the stocks is, day to day, there's not always a ton to talk about. Today's a little interesting. Let's go look at oil again. Thanksgiving strategies. Typically, let's look at the Stock Traders Almanac. It's probably going to be a bunch of bulls. Yeah, it's 2 bulls next week. Markets close on Thursday. Shortened trading days are typically bullish. Markets are typically bullish over holidays. They're light volume. It's easy for the market makers to manipulate it. It's easy to get headlines too, right? People get very headline driven during the holidays because, right, what are they doing? They're reading the news while they're traveling, right? They're bored at their in-laws. They're bored, and they're just reading the news. Very easy to pop headlines that are like, "Woo, oh, ah, oh wow." Interested to see how oil plays out here, because if this is the repeat of this pattern, I can draw a little arrow. Yeah, I freaking hate trading view. There's OPEX. Here's OPEX. Oh, you don't want to play that game? Copy. Oh, Jesus. Paste. Well, that didn't work. Clone. Thanks, Strat. Yeah, interesting point about, again, this is why I ask people to play the Guess the Nest Candle game, and they'll go back and they'll see how a lot of holidays are usually bullish. The action around holidays is bullish. And then also, if the market is tanking, it can bottom during light volume holiday around holidays. Saw that many a times. Or near Christmas, like the massive wipeouts, and the zinc bottoms. Or it bottoms during Martin Luther King holiday, sometimes during the 4th of July. Again, it's usually in trends, but you still don't understand how the MMs can be on the long side of the options if they are the main sellers. All right, let me try to explain it again. If they're selling puts and calls, and as you get closer to options expiration and people don't want to hold them, and they're selling them back, who is the buyer of the options? Who makes the market in options? The market maker. What is the goal of the market maker if they are going to be trying to kill puts and calls? Move them to zero. Okay, well, what if they have an abundance of calls that they've absorbed? Don't you think they want the market to rise? They're making money here. You think they're traders too. Remember, the market makers are traders as well. So if they get all these calls sold to them, they're okay with the market rising. They have to take the other side of the trade. Well, they absorb a bunch of calls. Great. Then they rally it up. And then they sell it right back to the idiots who sold them 5 minutes ago or 5 hours ago. Yeah, have a good one, Neo. You see that all the time in the options game during the main options expiration. If the market pops like it did, here you go. Let me do this. This is a great question, and it's getting me excited to answer. Because think about it. Don't you think at the highs everybody was buying calls? Woo! Market makers now got all these calls that go to crap. At the lows, they're buying puts. right? Now they're trying to find that middle. Well, at a certain point, if they got some calls, don't you think they want to work this sucker right back up to get people to buy it again and then get it stuck at a point where they lose from every trade they've done? And we talked about how like people who can just consistently lose in options, they don't realize this. Remember, they're trying to kill the most amount, which we know that's a fact, but we don't know how that's going to play out. So if everybody bought calls, they sold all those calls. Now they're giving up and they're buying calls. They're buying calls. Now at the lows, they're giving up because it's OPEX. It's Thursday of OPEX. They're like, fuck, man, I got all these calls. They're worthless. They're worthless. Think about all the people who bought the calls on SMH yesterday. Worthless. They're like, oh, they're done. Boom. Now the market makers got them. They have no reason not to mark up the price now that they have the calls, and they'll sell them right back to you and then do what? Chop it out. Goodbye. Same thing. People who bought puts because they're like, oh, the market's about to tank. Boom. Now the market maker owns all the puts. Well, let's bring it right back down. All right, here, now people want to buy the puts at the open. At the open. All these people probably bought a ton of puts. Market makers like, here, have them. You sold them to us, you sold them to us when they're worth nothing. Talk about this joking, like knowing how the institutions, like the market makers are like literally printing money against retail, especially specialists in options. If Eric or Scotty are joking about how like sometimes those guys are like leaving for the bar at like noon and letting the algos run the whole thing because it's like game over. I mean, they literally this morning, first hour, that's when they worked. They did all their work in the first hour today. Right? Here's the SPY at the open. Oh, it's game over. Buy it. Oh, I got to buy calls. All right. No, I got to buy puts. Oh, I got to buy calls. We'll see what happens. Yeah, but they buy some back. But if they were the ones writing the options, they just close their positions. OI goes down when option buyers sell them back. Yeah, but you don't know who's taking all the transactions here. I mean, we could argue in circles about this for days. But I'm pretty sure if you're manipulating the market, which we believe that they can, you know that they're going to be buying them back. And you know that they control the action within the action itself. I mean, do we want to argue about the specifics of it? I don't know. I just know they print money. I just know they continue to destroy retail traders. How they do it specifically, in every specific circumstance, I don't know. I don't need to know that. I tried giving up. I gave up on that decade ago, trying to figure out exactly where their spots were and how they're going to play it. Like, they're going to do what they're going to do. I can't predict the 6.5 hour intraday action every day. It's just a waste of time. It's a good question, though. It's hard. It's really hard to know. Yes, they're closing out options, trying to get them open interest to zero. But you have to remember, like, people start buying and selling all during the day. Yeah, they could also be dumping their head shares. Yep, exactly. Yep, absolutely. Like, there's a million ways to slice this. Again, the average person doesn't even think about the strategies they're using. Remember, we talk about the trade, like market makers are also like this. They're not all or nothing traders. They're not all or nothing trading. They're absorbing inventory to manipulate it and use it to their advantage later, right? It's so hard to know for sure, and no one knows. So why like put that type of energy into it? And I've seen it wrong more than not. Yeah, and on the way down, shorting to hedge the puts being bought. Yep. Yep, it's choppy, sloppy action, the market. And that's the thing. I mean, the market makers love VIX in the 20s because it's choppy. Directionally, it's hard for them when the VIX is in like the 15 to 18 range because then usually the market goes in like very small moves up. Very hard for them. But no pity for them. Who cares? Any other questions, thoughts, concerns? Again, I used to be so heavy in the options game, and I just literally, my brain, I turned it off. I was like, it doesn't matter. I've tried. Think about like chopping wood of a tree that just regrows, and then you end up spending time like re-chopping at it and going, all right, well, what about this, and tweaking this? And it's like, man, I am exerting so much effort to get little reward. when it's like, watch the swing zones, watch the fibs, watch the moving averages. Just expect chop. Know certain things. Be more probability based versus like, oh wait, it has to pull back on Wednesday. No. Well, let me look at the open interest. Let me see what's going on. Oh, I don't know. It just, it looks like somebody's buying, or there's a lot of volume at the 395 strike. Well, is that going to be the pin? Maybe it's going to go there. Okay, maybe it does. Maybe it doesn't. I just don't know who's taking the other side of these trades all the time. It's not like the markets used to be, man. Just not like it used to be. I just don't trust it because I've been burned by it. And I've literally have thought I saw a perfect pin action game to a certain price, and it just was like, wrong completely. 1,000% wrong. It's like, whoa, what happened here? Like, I don't like, at least the way that we do things, we're probability based, layering in, trying to anticipate stuff. But like, if it's just completely wrong a lot, like that's not a good system to be based on. Like, I just hate being completely wrong. Like, I want to know, like, hey, all right, if we're trading like these areas and certain things, like, all right, if they're wrong, hopefully they're not going to be really wrong. Or if not, you stop. But I mean, I could get into this topic for hours. Any other? I prefer to move on because it's just like, man, it brings up a lot of pain. Think about it again, like chopping at the tree, trying to find the magic. This is why I always relate with Curran. If he's relating here, he's always trying to find like the best option perspective and what the open interest is and what they're going to try to pin it to and all these, little things about what's happening during the day. And it's like, dude, I did that for a long time and it lost me a lot of money. So it's a source of pain. It's like, just give up. Put the axe down. Stop trying to chop at that kind of stuff. You're trying to be smarter than the market maker. Why don't we just like look at the volume and the price action and the volume at price zones and all the things the algorithms are controlling the market with? That's easier. All right. Discord room. Y'all got any questions? I can see. Oilers seem to be good today despite, the Edmonton Oilers did rally back to tie the game, Gemini Joe. They rallied back to tie the game, it looks like. XOP finished down 33 cents. EQT was up. ExxonMobil was up. PXD was up a couple bucks. Oxy was down 45 cents. Yeah. Drip finished flat. Oilers came back and tied the game. Big game tonight. Canes versus the Avalanche. Good buddy of mine's a big Florida Panthers fan. They're playing Dallas. I do appreciate hockey. Never played it, but I appreciate it. Reminds me of basketball, but on ice. Any other questions, thoughts, concerns? Yeah, Ken, I don't know if you've got like a bunch of money tied up into the market if you're listening and you're just not sure what to do. When in doubt, alleviate the pressure of being right. Remember, talking about all or nothing trading is very intense emotionally. Well, this is the problem with a lot of folks who never took any money off at the highs, as we talked about November, December. Like, hey, this thing looks like it's about to flip. Once the Fed said they're not going to be buying stocks anymore, COVID, stimulus money was done. I was like, this is not going to end well. You've literally created the capitulation up move. Now it might need, you hate to say it, 12, 18 months to base and smash out, or this could be like decades of junk. Decades of junk. Now, if you own cash, it's not ideal. Again, you're losing money on inflation, so you'll have to pick and choose your battles. But I'm not going to touch the market until the VIX gives me a reason to like get excited. The VIX in the 30s has never been a real bottom. I can't remember once when the VIX was like the bottom of the bottoms. No, it was just choppy. If you've never witnessed VIX kind of VIXanity, like here, even in 2018, you had a VIX of 50. 2015, you had a VIX of 50. Here you go, 20 to 12. You see what I'm saying? Like, we haven't even gotten up into the 50s, 40s, and 50s. Like, this can't be the bottom. Good recap. Appreciate the real-time chat and chart today on WI and USO to keep eye grounded on the. Yeah, no problem, Jordan. Yeah, man, decade of chop, that would suck. A decade of chop though wouldn't suck if you knew how to trade around the sentiment. Prophetic, poetic, P-Bird, I'm assuming. That would, to me, that's It seems like it would suck, but you would just become a great at trading the ranges. Which, if you liked CF, you might like a choppy market where you just buy the highs, sell the lows. Not buy the highs. Sorry, buy the lows, sell the highs. That you wouldn't like that. I mean, I don't mind it once it gets predictable. Again, I think people hate like trying to, they're always trying to like dig to find the hardest and most difficult trade with the most upside. What does Livermore say? Like, do what's obvious and what seems easy, and then leverage it. Well, if we knew we were going into a choppy couple years like the 70s and commodities were leading, I wouldn't have a problem with that. Market might get choppy. Again, like the actual indexes might not make new highs, but certain commodities would act certain ways better. It wouldn't be. Again, we have to adapt. That's the monthly. That just looks interesting. Any other questions, thoughts, concerns? Because a lot of people love asking the questions, and I find out later that they're like, hey, someone said I'd like appreciate you being able to answer. I'm like, man, I wouldn't even thought about saying that unless somebody asked the question. And again, I always talk about just trying to keep things simple, because I've tried to find the difficult gem that lies at the bottom of the mountain, trying to find the, what is it in the Lord of the Rings, just trying to find the one gem in the pile of gold hidden, under the dragon. Yeah, well, you know what? I would have been okay just if you walked in there and just took a pile of gold and walked out, right? No, but you're trying to find that stone or whatever. It's like, all right, well, do you want to be the king of the world, or you just want to be rich? I don't know. I'll be rich. I'll be happy with that. All right, I'm going to let y'all roll. I appreciate the love, support, donations. Again, it all means something. If you're learning here, that's the goal here. Remember, don't walk in front of me, don't walk behind me, just walk with me in this whole process. You'll understand. It starts making more sense once you see the market for what it is. A lot of people try to get ahead of it and be like, well, Dan, have you ever seen this before? And it's like, yeah, I've seen that. Oh, hey man, I don't know, I haven't been paying attention. Can you just can you update me what's going on? No, I can't. I've got, I don't know, hundreds of people that are consistently asking me for help. And honestly, I prefer to help the people who don't ask the most. The people who are actually doing the hard work. Like, if you're busting your ass and you're like, man, I don't know, and you're not over trading and you're seeing the bigger picture in things, that's where I can help. It's the people who are like, hey, what's going to happen at the 9:50? What's going to happen at lunch? What's going to happen at the close? I mean, I can try to give you an idea, but like, that's, you're asking questions that assume a lot of things. Well, do you want to sit around and watch the market all day, every day? No, that is a full-time job. I do not recommend that for anybody, because again, the more you trade, the pressure is to win constantly. I try to think of this as, you've got a shotgun and you're walking through the forest and you're trying to hunt dinner. Do you shoot at everything that moves? Do you shoot at every time the leaf flickers over there? Do you shoot your gun at the rabbit that runs by? No. That's how you waste ammunition. The goal is to find the best and most sound trade setups and trade them. Or maybe it's a bow and arrow, right? You can't shoot your bow endlessly. All right, I'll talk to y'all later. Have a good one.